A little bit of good news. Finally, Melissa, Bitcoin, which had been struggling at the $6,800 level for over a month, popped over $7,000 in just seconds in the middle of the day. So here's the news. MasterCard has published a document outlining how they may try to speed up cryptocurrency transactions by linking accounts holding both fiat currency and cryptocurrencies. So this document, which was published by the U.S. Patent and Trademark Office, so it's a serious document, notes that it often takes a significant amount of time, 10 minutes is typical, for a blockchain-based transaction to be processed. But that fiat payment transactions can be done in nanoseconds. Okay, we all know that. This wide difference, though, puts payments using cryptocurrencies at a big disadvantage. So merchants are wary about accepting blockchain currency, and individuals may also have trouble proving their identity and ownership of a wallet. All right, so what is MasterCard proposing? They want to offer a new type of user account that would allow a user to do transactions using cryptocurrencies, but pegged to a fiat currency, presumably their credit. This transaction would use the payment system and the security features, presumably MasterCard's features, but the transaction would be done in cryptocurrencies. Now, this document also notes that this may take cryptocurrency payments, may make them more secure because MasterCard may be able to use its existing risk algorithms to evaluate the potential for fraud, algorithms that are not currently available to blockchain networks. Now, this is the first decent piece of news for cryptocurrencies in a while, and even led to a modest pop in volume for Bitcoin. All right, maybe it's not the end or the beginning of the turnaround, but it's certainly a good start. Back to you, Melissa.
It sounds like, Bob, that MasterCard's proposing like a stable coin.
Yes. Essentially, what seems to be happening is they're offering to say, okay, so I have a certain amount of credit available, say $10,000,
right, that
I can automatically use. I am going to essentially have another account which has cryptocurrency in it. They're going to pay it using crypto and currency, but guarantee essentially that it's backed by my own account there. So if you send out a fraction of if you have one Bitcoin in your account, you send out a fraction of that, essentially MasterCard will be guaranteeing, this is what it seems like, that the payment is made instantaneously, backed by my own credit, my account.
Got it. Bob, thank you. Thanks for that explainer. And we do want to draw your attention to a poll from our sister show, Futures Now. Fabulous online sensation that discusses Bitcoin pretty much all the time. Now, earlier today, Futures Now asked Twitter if they thought Bitcoin would break above 7,000. That was when Bitcoin was trading just under $6,800. Well, more than 7,700 people voted. 70% said no.
Pretty cynical.
So could all this pessimism be fueling part of this rally? Who better to ask than raging Bitcoin bull Tom Lee of Fundstrat, who joins us. He's over at the Plasma with two charts that he says could signal a Bitcoin moon boom. Hi, Tom. What are you looking at?
Well, I'm looking at a couple things. So want to mark this chart up. This is the 200-day moving average for Bitcoin, and that represents the average price roughly for the past year. And there's a gap here. Bitcoin is trading 30% below its 200-day moving average. It turns out that that's actually a pretty positive signal. And the reason it's a positive signal is that this has happened a few times since 2009. The first time it happened is here, October 2011. And the second time it happened was December 2014. Why is that significant? Well, number one, Bitcoin bottomed within a month here. Oops, sorry, I drew that the wrong way. And it bottomed within a month here. But I think it tells us something even more important, not the next month. It's telling us that if you look forward to the next 6 months, you're going to do pretty well owning Bitcoin here. So to us, the message is when Bitcoin's trading 30% below its 200-day, it's a huge bull signal because, one, we're nearing the end of a correction, but also if you look forward 6 months, you're going to do pretty well owning Bitcoin.
All right. Tom, why don't you come on over to the desk here?
You don't put it up to a vote?
No,
Should
not
Tom
anymore.
come over?
I'm tired of voting.
You already voted. Want to be a poll? Wait, we're going to put up a poll to a guy? Come on.
Thanks, Michelle, for bringing the chair over.
Hey, Tom.
Just saying.
How are you?
Great to see you.
Gummy bears?
It looks like the flag.
Let's get back to Bitcoin, aside from the gummy bears that we have every day here on set. So when you heard the MasterCard news, Tom, did you think that would be a major catalyst, or did you think that it was really the technicals that started, acting?
Well, over the weekend, there were quite a lot of folks who were talking about TA and the potential formation of either an inverse head and shoulders or a Wyckoff, buy-off. So it sounds like the technicals were really starting to become more favorable. I think something like the MasterCard news is positive because it's really validating the idea that digital money or blockchain-based money is a valid form of transactions. And, you know, even if it's not recognized in the U.S., we know that in Japan they've really taken a much more positive view on digital money or blockchain-based money being real transactions. So, yes, it's good news.
So when you outlined those times when Bitcoin was trading 30% below the 200-day moving average, what was the average move higher to the next sort of plateau?
Well, one thing that we outlined in our note on that is if you looked at your probability of making money 6 months out, it was close to 100%. So in other words, if you could ever buy Bitcoin 30% below its 200-day moving average, you almost always saw good risk reward being long.
At what point, though? How long did you have to wait into that trade? Because if I look back on the Bitcoin chart, in the in the early part of this ascension, you could have sat underwater there for what seems like a fair amount of time.
Yeah. So what I'm saying is 6 months. So if you said buy it and sell it 6 months later, your probability of making money was over 90%.
Within 6 months. Sorry.
Yeah.
Okay.
Tom, do you think there's a lot of money out there that would rather buy Bitcoin at 7,500 than 6,000, just feeling like, you know, the bottom's been tested, more money's flowing?
Yeah, there's, I guess the term people use is reflexivity. There's a lot of reflexivity in crypto, meaning there's a lot more enthusiasm when Bitcoin's trend is higher. And so I think there's a lot more buyers at 20,000 than there are at 6,000, and there's probably more at 7,500, but there'll be more at 10,000.
Does the same hold true when Bitcoin's 30% above the 200-day moving average? Does that become a sell signal, not unlike what you're seeing on the buy side?
Yeah. So, Guy, one of the sort of offshoots of that is actually the Bitcoin Misery Index. And it turns out whenever that hits 67, that has marked Bitcoin's essential top. And so that, you know, we hit 67 in December. So.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.